Okay, let's get a more detailed look at today's trade. Live now to Julia Lee, joining us from Bell Direct. Julia, good afternoon. Always great to speak with you. Can we get your thoughts? Like I mentioned an hour before the close now, the local market being supported by the big banks and the energy space.
Dan, it's looking pretty good on the market today, and this is really a trend that we have seen in the month of October, where we have seen implied volatility for the Australian market or the Australian VIX really coming down to a lot more normal levels and lower levels as well. And just to bring up that volatility index or the XVI over the past year, and this is what it looks like. You can see that it was extremely elevated in August and September when we did see those big losses for the market, but you can see that in the month of October it's come right down to much lower levels, and of course the market has done quite well as well. In fact, the last 2 weeks in October, every single week in October has been a positive week so far. This week though, we do need to close above 5,279 points to make it the third consecutive week of gains for the Australian share market. And with a little bit of weakness creeping in the last couple of hours of trade, it does look like it's going to be hard for the Australian market to reach that one. But it is largely a positive day on the market. All sectors higher except for the material space on the back of that high performance over on Wall Street, which was up by 1.5% overnight. In particular, I think Fortescue a really impressive performance after its quarterly numbers yesterday in the 7th quarter of cutting costs, and Fortescue stock up by more than 5% at the moment. But the real strength in terms of sectors today comes from some of those high yielding areas. The property sector and the utility space are really outpacing the gains of the rest of the market. So they're the two key areas of strength today, but altogether a good day for the market. But we are watching 5,279 points to make it a positive week.
Oh, and Julia, we're sitting at 5,261, so looking unlikely at this stage. We'll have to track the index throughout the course of the next hour. Can I also ask you about some of the losses that we're seeing in the materials space? As you flagged, Rio Tinto's iron ore shipments up 17% on last year, but the stock's being sold off today. It's down more than 1%, as I mentioned. What do you think is supporting the declines in valuation?
Dan, I think actually the quarterly numbers were a good result from Rio Tinto, and they do remain on track to meet their year-end production targets. But what we have seen overnight is a fall in iron ore prices, and with Rio Tinto getting around about 85% of its earnings from iron ore, it is highly leveraged to that iron ore play. So not surprising to see Rio Tinto and BHP down today, although it is surprising to see Fortescue bucking the trend there. In terms of these third quarter numbers, we did see shipments from Rio Tinto rising 12% quarter on quarter and 17% year on year, coming in at 91.3 million tonnes. So I think slightly above what the market was expecting, and that means the year to date we have seen a rise of 11% to 245 million tonnes. It means for the fourth quarter we do need to see a slight ramp up, and they need to hit just under 95 million tonnes to reach their yearly target of 340 million tonnes. But I think they will be able to meet this target and might even slightly beat that target. But the fact that we are seeing softness in terms of iron ore prices means that we are seeing softness in terms of the share price performances of some of those iron ore miners.
And that fall in the price of iron ore, I think it was $1.10 from memory overnight. Certainly probably one of the biggest falls that we have seen in some time, because it seems as if the price of iron ore has been stabilising. And there is lots of talk about where the price of iron ore is going, but I think the general market view is that it's quite bearish with new supply coming online pretty soon. What's your outlook for our key miners, I guess, given that bearish sentiment in the space? Do you think there are better investments out there?
Look, iron ore has averaged a price of around about $55 a tonne since the new financial year from the 1st of July. So that's, I think, been a good result, especially for the big miners like BHP, Rio Tinto and now Fortescue, which are making still a pretty strong margin on that price. But the fact that there is a wide range of forecasts in the market, with a lot of those big investment houses forecasting as low as $42 a tonne average for next year, means that a lot of these iron ore players, there's still quite a lot of bearishness built into expectations. So I guess it does depend on the iron ore price. China, of course, last week was on holiday, so we did see a little bit of stability there. We have seen China coming back, and that's added to a little bit of volatility in terms of iron ore. But in terms of the latest set of numbers that we've seen, it does look like iron ore demand still holding up fairly well from China, even though prices haven't. So a little bit of volatility there, but I have to say in the year to date, it has been pretty surprising how well iron ore has held up in the new financial year with an average price of $55 a tonne.
Julia, can we also ask you about the energy space at the moment as well? Big news out from Santos today, shipping its first cargo from GLNG up in Queensland. Shares up 4.2% today.
Santos is outperforming, and it's great to see the first shipment coming through from the Gladstone LNG project. Now, this project has a capacity of 7.8 million tonnes, and I guess the next key milestone for this project will be in the first quarter of next year, where the second train is expected and a ramp up is expected there. But we know that Santos has been underperforming the market and underperforming its peers because of its weak balance sheet. In fact, if we have a look at the oil price in the year to date, it's down by 43%, but Santos shares are actually down by more than that, down by 56%. And that compares to a company like Woodside Petroleum, which probably has the best balance sheet in the energy space, which is only down by 21%. So Santos certainly has been punished because of that weak balance sheet, the need to repair that balance sheet, and we are expecting to hear of some asset sales in the next few months to help boost the strength of its balance sheet. But for today, outperforming, and nice to see that first shipment from Gladstone LNG.
All right, Julia Lee from Bell Direct. Thanks so much, Julia. Always appreciate it. Have a great weekend.
You too. Thanks, Dan.